Taxation video lesson, Federal Budget Receipts. A macro video lesson with Steve Reff and Eric Allmeroth.
We're going to look at this term receipts in the federal budget. And the term receipts is just a nice way of saying taxes. Well, taxes have a negative connotation. If people say we're going to raise your taxes, everybody gets upset. But if they say we're going to raise receipts, everybody goes, good, it's about time, until they figure out it's your taxes. And then they go, no, don't raise new receipts and don't raise old receipts. So we're going to look at taxes, but in the federal budget, it's called receipts.
Americans pay many types of taxes, as you can see from our pie graph over on the left. We've got payroll taxes, which includes things like Social Security and Medicare. We've got individual income taxes, Federal Reserve earnings, excise taxes, corporate income taxes, and other.
So that's what we're going to be covering in this video.
The federal government collects revenues from a variety of sources, such as income taxes, individual income taxes. This is the largest source of tax revenues and half of total receipts annually. Income taxes are levies, acquisitions on wages and salaries earned by individuals, income from investments, and other income.
Payroll taxes, which help to finance Social Security, Medicare, and unemployment benefits, are the second largest source of federal revenues and make up 1/3 of total receipts annually. Payroll taxes are deducted from workers' paychecks through a line item called FICA, which stands for Federal Insurance Compensation Act.
Then there's corporate taxes. The government collects taxes on the profits of corporations. In 2019, most corporate income was taxed at 21%, reduced from 35% by the 2017 Tax Cuts and Jobs Act.
You know, Eric, they're talking about this currently in November of 2021, raising this corporate income tax up close to that 35% that was back in 2017. Next, we'll look at excise taxes. Excise taxes are indirect levies upon transactions of particular goods or activities such as gasoline, alcohol, and gambling.
Beyond excise taxes, other sources of revenue include estate and gift taxes and payments to the Federal Reserve.
And the last type of tax that's included as a receipt are custom duties and tariffs, or taxes imposed on certain imported goods. So that's what we're going to get into when we quickly look at the receipts the federal government gets from all of these different types of taxes. So first, let's look at individual income taxes. Again, these numbers are from 2004. As you remember from a previous lesson, these income taxes follow a progressive tax basis where, as you can tell from the table, takes a higher percentage from higher income levels. The same thing holds true whether it's single income tax filers or married and filing jointly tax filers, and also head of household filers.
Next, we move on to corporate taxes. We've seen the individual taxes, and then we look at how corporate organizations are taxed differently.
What we're looking at here then is the private sector, individuals' taxes and corporate taxes.
Individuals and corporations are both private sector taxation.
And are corporate taxes progressive taxes then?
It would appear so, Steve. At 15 million, they're taxed at 38%. And if they're only making $50,000 a year, they're only taxed at 15%. Definitely appears tax rates are increasing as income increases, particularly up to profits of $335,000 taxed at 39%, after which it levels off slightly and declines to 35% for profits over $18 million.
And the reason that they're both progressive taxes, individual and corporate taxes, is because they're both entities, a person, place, or thing, and these are progressively taxed then.
Who else besides entities are taxed?
Tariffs, so that's an outside entity, but that's not a progressive tax rate. That is a per unit tax rate. That's a proportional tax.
In other words, that's taxing goods. This is taxing people, entities.
The problem with that is an entity could be a person, place, or thing. And a thing could be a good, which could be taxed with a tariff.
So corporate taxes are progressive taxes on net income or profits. And we can see it's progressive because the higher the profit net income level, the greater the rate of taxation. At the extreme, it's 39% for the mid-range corporate profits, and it's 15% for the smaller corporate profits, leveling off to 35% for the largest corporate profits over $18.3 million.
As you can tell, these are figures from 2004, and the tax rate went all the way up to 35%. And in 2017,
Congress voted it down to 21%.
Next is Social Security and retirement receipts. And so this is what people are receiving once they reach retirement age or they have some sort of Social Security disability and apply with the Social Security Administration. This is the receipts per year. So in 2004, $733 billion was received for retirees or people with disabilities who have filed with the Social Security Administration.
So next we have excise taxed goods, which is at $69 billion a year. And this is also referred to as a sin tax because you can see that a lot of the products being taxed here, such as cigarettes, gambling, alcohol, which are in the photographs, are goods which probably are not the healthiest to consume. Also, we have gas and firearms under excise taxed goods.
Boy, if you look at that excise amount, it's $69.9 billion. I hope that most of that money is actually coming from gas tax rather than all of those sin tax. And I pray that most of that's coming from sin tax, that amount doesn't keep going up, or else we're going to have a lot of people who've been sinning a lot more or a lot worse over the next decade or two.
Well, I think also it's worth noting some of these products that are being highly taxed are ones that create health problems that are going to be another drain on our tax system if those health problems manifest into something that is going to have to be supported by government aid.
Yeah, I would agree. When you even look at all those pictures, each one of those would cause me a health problem. Have you ever pumped gas and just smelled those fumes going into your lungs?
You're right. Those are strong fumes.
And guns can cause a health problem too.
They have on many occasions.
Gambling could cause a heart attack. You know, there's a lot of problems going on with this tax. You know, maybe we should tax everybody more on this.
Well, having lived in a gambling town and seeing tourists come in and losing their fortunes and their house payments on a regular basis, that is also causing stress that causes health problems.
Yeah, which causes people to drink more, which then brings in more tax dollars. See, there's always good when there's something bad.
Don't listen to him, kids.
The excise taxes included in this 6.9 include alcohol, tobacco, crude oil, windfall profit, telephone tax, ozone depleting chemicals and products, transportation fuels. And then I love this, other.
Yes, and what comes to mind here is I noticed we were talking about in the last slide, a lot of what's happening here is this taxation is meant to discourage negative externalities.
That's a great concept. For people who've only studied macro, I love that you brought that microeconomics in here.
I think it's easy to point out when we refer to negative externalities, we're just talking about negative outcomes such as pollution in the environment.
And one way to reduce that is to raise the price by putting a per unit tax on that good or service,
such as gas or crude oil or ozone depleting chemicals. So excise taxes also include highway taxes, airport and airway taxes, black lung disability taxes, inland waterway taxes, hazardous substance superfund taxes, post-closure liability, hazardous waste taxes, and oil spill liability taxes.
You could already see what the negative externalities are, but when you look at highways and airports and airways, even though the sound of those would cause a negative externality, the social benefit far outweighs the social cost. The government does step in on these negative externalities and tries to prevent or at least subdue some of these negative externalities.
And that explains why there would be taxes on those things, even though they're mainly producing positive aspects.
There you go. Good.
The next is the estate tax. An estate tax is tax on inheritance. When someone passes away, they pass on their belongings to their heirs. This constitutes their estate or what their heirs will inherit.
The first 1.5 million of estate is not taxed. And then after that, it's taxed at a rate of 48%. Eric, that was in 2004. Do you happen to know what it is roughly now?
Currently, the estate tax does not kick in until the value of the estate is over 11.7 million. So consequently, most people will not pay any taxes on an estate.
So it seems like only the wealthier people will pay those taxes then.
Estate and gift taxes. Not only are we paying taxes on the value of what they left as a deceased person, but we're also paying taxes on the gifts we offer.
Look at that first number from $0 to $10,000. There's no tax on those gifts. So do you know what wealthy people do? They start giving money to their heirs before they have to pay an estate tax. So every Hanukkah or Christmas or whenever, they give their grandchildren $10,000 so that they don't have to pay taxes on that. So they let the heirs enjoy the fruits of their labor with the money while they're still living, as compared to pay taxes to the government if they're wealthy. Another one is custom duties, which is really a nice way of saying tariffs.
Custom duties includes tariffs on imports, just like these container ships coming into the harbors, bringing goods. We will sometimes tariff these goods so that the countries bringing them in have to charge us a little bit more, which makes our domestic businesses more competitive.
So what's the most recent tariff you recall Congress or a president initiated in recent times?
Trump raised tariffs on China at one point.
Yes, and he raised it on steel. And the reason being is they felt the government in China was subsidizing the steel companies, which was hurting our steel companies. So he placed tariffs on Chinese steel, which raised their price, which increased the demand for our steel, which increased the price of steel here in the US. That was the ultimate goal. So when they say, let's put tariffs on other countries, everybody goes, yeah, it's about time we do that. So what are we doing? We're raising the price of their products and raising the price of ours because increase in demand for our domestic producers. So how would this go along if they say, let's put a tariff on steel because we're going to raise everybody's price of steel? That wouldn't go very well, but sure goes over well when they say, put a tariff on those foreigners. Last, we have miscellaneous receipts. And I love this. Miscellaneous receipts, only $32.6 billion. So what's included in miscellaneous receipts?
Well, since you asked that question, Reff, miscellaneous receipts include sale of U.S. government property, proceeds from sale of seized goods, gifts, and donations.
When was the last time you wrote the U.S. Treasury a check and said, happy birthday, and gave them a gift? Proceeds from sale of seized goods. I bet you that brings in a bunch of miscellaneous receipts. And then the last one, sale of U.S. government property. Okay, let's sell the Washington Monument.
Yeah, I've got a deed here for the Grand Canyon. If you'd like to own that, I can sell that to you.
Oh, you guys are all still making fun of Arizona. Hey, if you want a deal, I got some land in Arizona.
So total receipts, $1.88 trillion in 2004.
I'm sure that's gone up a heck of a lot from 2004 to 2021.
Yes, it's closer to 3.6 trillion at this point in time.
Depending on these bills that are going to go through Congress in the next week or so. Eric, what do we get when our total outlays are greater than our total receipts in this budget here?
We're going to get a budget deficit of $412 billion, which adds to the national debt.
What's the mathematical formula you use to get $412 billion?
Well, it's pretty technical, Reff. You have to take 1.880 trillion and put it above 2.292 trillion and subtract. And since that number at the bottom is larger, it's going to be negative. And since the total outlays are larger than the total receipts, negative $412 billion.
It's a deficit. I think this is a great lesson for students to understand all of the outlay the federal government has, all of the taxes that it collects, the difference between deficits and debt. And I think they'll become better educated citizens when they go to the voting booths, when they're concerned about taxes or government outlays.
Well done, Steve Reff.
Thanks, Eric. Really enjoy working with you.
Taxation video lesson, federal budget receipts, the end.